I understand investing in the markets while growing my nest egg. But once I retire, should I get out of the markets? Isn't that the best way to keep my assets safe?
Well, safe from market fluctuations, maybe, but safe from you running out of money, not necessarily. And what do I mean by that? So in the previous segment, again, we had Sean Swanson. We were talking about looking at your Social Security history as a great way to help you understand the power of inflation, how your wages have gone up, but they've needed to. You've never felt really that much richer when you look back and see how little you earned 30 years ago on your Social Security sheet. So we have to inflation adjust your income plan in retirement, and Social Security will not, unfortunately, keep up with most people's real household expenditures when it comes to that. So most people need to have a portion of their assets still invested in appreciating assets like the markets. Now, we would like to show you how to diversify into multiple asset classes to get growth on those dollars, but the safety part should be any money that you need in the near term. And some people are really risk adverse, so we might push that up. And again, we want to build a plan that's tailored to the individual. So, but for most people, we're going to suggest at least a portion of their assets take on things like market risk, because over a long period of time, they're going to get a higher rate of return, at least historically speaking, and that's going to help us keep up with the pace of inflation.
This is one of the biggest mindset changes I have made since coming to work here almost 5 years ago, is that you think of retirement. I got to cross the finish line. Well, it's a finish line perhaps in terms of your working life, but it's a transition to a new stage of life that could well go 20 or 30 years.
Oh, very, very easy over 30 years for a lot of folks today.
A static pile of money will disappear over time.
Very quickly,
have to think about growth even in retirement.
Well, I mean, I think it's awesome. Just since you and I met, oh gosh, almost 8 years ago, whatever it's been. But yeah, you've been on board for 5 or
yeah.
I'm like, how long have you been here?
Right.
But exactly how much information you have learned. And I mean, you've got a law degree. You're a pretty smart fella. You worked in the legislature, city councils, but how much information you have learned.
I should get 3 credit hours at least,
because there's so many factors into a true holistic financial plan that cover all these areas. Yeah. How does Medicare affect your income plan? How does Social Security affect your taxation plan? How does risk management and taxation work together? All of these things have to work together if you really want to maximize the efficiency of your assets and the resources you've worked your whole life for. So do not tread lightly here.